Well, thank you everybody for joining us today. Before we get started, I just want to say our entire team here would like to wish you and your family a happy holidays and thank you for joining us. 2020 has certainly been an exciting year in the capital markets. As a result of the global pandemic, we've had multiple tax acts passed Congress with several moving parts that can be hard to track. So we thought we'd use this webinar as an opportunity here at year end to just share with you some of the important changes that will be ending this month, as well as some of the changes that you might not be aware of that will continue into the future and have an important impact on your financial plans. Our hope is that at the end of this, you'll have a deeper understanding of how these changes could impact your personal financial plan. So we want to make sure everybody has an opportunity today to ask questions. We've muted the line though because of all the background noise that tends to show up when you get a lot of people on a webinar. So I wanted to just walk through with you real quickly how you'll have an opportunity to ask questions. In the window that you're looking at that you see your slides in, if you just run your mouse over that window, over the bottom of it, you'll see the ribbon at the bottom here, which includes the green icon to share your screen. Please don't share your screen. But right next to that is a chat icon. And if you click on that chat icon, a window will come up that will allow you to privately send a message. This is going to go to Joanna Adelson, whose computer we're using today. Type a question in there, send it off to us. It'll be private and anonymous. And we'll stop at multiple times during the conversation today to take questions. So again, as things come up, please ask them, whether it's something that we're covering or if it's a general question you've got that's not on the topics we're covering today. Either way, please feel free to ask questions. So before we get started, just some real quick disclosures. We don't have intentions today to discuss performance at all. But if for some reason performance does come up in the Q&A, just a reminder from a compliance standpoint that past performance is not a guarantee of future results. So before we jump in, I just wanted to thank our team. Most of you have all had a chance to meet our team at one point in time or another. A number of us are gonna talk to you today. Bryn on the far right is the only one that's not going to have a role today. But if you look at our team on the left, the three of us, myself, Katie Dow, Joanna Adelson, all three of us are on the advisory team. On the right, Rachel Grant and Bryn really head up our operations team. And I just want to say a big thank you to the team. 2020 has been, as I mentioned earlier, an exciting year. It's had lots of opportunities for us to do some great work on behalf of clients, but it's been a very busy year, whether it was tax loss harvesting and rebalancing back in the spring, or whether it's dealing with a lot of the emotions around the election this fall. We've had lots of opportunities to spend a lot of time with clients, and I just want to thank them for all of their great work this year. So real quickly here on our agenda today, we're hoping to only take up about 30 minutes of your time. We want to talk a little bit about the Biden tax plan and some of the different proposals that you've either heard on the news or read in the press. And then there's two different tax acts that were passed here in the last year, the CARES Act and the Secures Act. Both of those have some important items in them that you understand what's ending and what's continuing forward. So we want to make sure everyone's clear on how those two tax acts work. And then we're going to talk about some of the changes and reminders for different things with respect to maybe contribution limits that are going to be changing next year that everyone should be aware of. And then Rachel's going to talk a little bit about our new client portal. We've spent the better part of actually the summer and the fall changing our portfolio management system to some new software. And it's going to have some great new functionality that we'll be rolling out to you next month in the January timeframe. So Rachel's going to share a little information with you about the good news there. And then finally, at the end, most of you on here are probably aware that in the fourth quarter, Charles Schwab acquired TD Ameritrade. And I just want to give you an update on that acquisition and exactly what you should expect in the coming year with respect to that. So with that, I'm going to turn it over to Katie Dow to talk a little bit about the Biden proposed tax changes.
Thanks, Mike. Hello to everybody and happy holiday season to you. It's nice to be on the call with you today and to find ourselves in December. It's been a challenging year for most, and we've made it through a lot, including an election. And now that we're in December, we can probably stop talking about that election, right? Okay, well, probably not quite yet. So you'll remember in November, America witnessed one of the most contentious elections in our history. And although some of the media outlets led us to believe that the end of the world was coming and the stock market was going to crash, you'll notice November turned out to be one of the best equity markets on record. In fact, it was the best performing single month on record for small cap stocks and the best month for the Dow Jones Index in over 30 years. So with that being said, there are still a few factors causing fear among investors as President-elect Joe Biden is set to take office in 2021. And one of those factors is the proposed Biden tax plan. On your screen, you'll see a few of the most significant changes proposed in that tax plan. And as the dust settles and we move into a Biden presidency, many Americans are asking, should I be worried? Well, we would say no, and this is why. The president-elect's tax plan is really on life support before he will ever get into the Oval Office, because the chances of raising taxes on businesses and high-income individuals likely rest on whether Democrats can win 2 January runoff elections in Georgia to take control of the US Senate. If Republicans can keep their grip on the Senate, any proposed tax increases are likely to be blocked. So regardless of what any news or media outlets, including Facebook, might be saying, we do not expect hardly any or possibly even no changes to the current tax plan. So for now, it's status quo. Until we know more, there is no need to act on the chance the tax rate might go up. There is one thing to remember, however, about the current plan in place. In 2018, the estate tax exemption was doubled to $11.8 million for singles and $22.3 million for married couples. This is set to sunset and will go back to the original exemption limits in 2026 if there is no change to the current plan. So with that, if you have any questions, please feel free to submit your questions into the chat box as Mike talked about earlier, and we'll be getting to all questions throughout the presentation. And now I'll turn it over to Joanna, who can talk to you about the CARES Act and the SECURE Act. Great. Thanks, Mike. Thanks, Joe. So a couple year-end reminders on your screen. The reminders in black are any contributions that you need to have completed by the end of the year. So you can see 529 plan contributions need to be done by the end of the year. Any IRA to Roth IRA conversions need to be completed by the end of the year. And of course, any gifting and charitable donations, including the one that Joanna just talked about, that $300 charitable donation. That needs to be done by the end of the year. Now, for us to make sure that we can get all of these things completed, we ask for some time to process your request. So in red are some Aspen Capital management deadlines we'd like to go over with you here really quick. So for any of these year-end contributions, conversions, or any donations, please have those to us by the 15th of December. If you have any new accounts that you'd like to open for this year, 2020, please have those requests to us by the 18th of December. And finally, any transfer requests that you'd like to get in 2020, please have that to us by the 23rd of December. Now let's move on to next year. Wow, one of the most anticipated years on record, I think. 2021, new year. So there's a few things staying the same and there's a few things changing. We've outlined those here on your screen. So staying the same are IRA contribution max contribution limits. So you'll still have a 6,000 plus 1,000 catch up over 50 if you're over 50. 401k deferral limit contributions, the max is still going to be $19,500 with a $6,500 catch-up provision if you're over 50. And the annual gift exclusion is still going to be $15,000 per individual. There are some changes and some increases as well. If you are contributing to a deferred contribution plan, that has gone up by $1,000, so your max will now be $58,000 in a year. The Social Security cost of living adjustment will be 1.3% for 2021. The standard deduction is going up as well. For singles, it'll be $12,550. And for married filing jointly, it's $25,100. And finally, health savings account contributions are going up as well. For couples, that max will be $7,200. And for singles, that max will be $3,600. Mike, do you want to pause and any questions? Yeah, so great question. Last year, the cost of living adjustment was actually 1.6%. So it has decreased over last year's to 1.3%. However, this is not something that takes place every year. So an increase of 1.3% is actually a good thing for 2021. Sorry, Mike, can you say that again? I didn't catch it all. So yeah, you do have to convert. When you make your conversion, you can make a partial conversion, but you do have to get that in for the total amount that you can. Does that make sense? Yeah, that's exactly right. And we usually work with your accountant directly in order to make sure that that number is correct and is the most beneficial for you, for our client.